Time for some business news now. Joining us is business reporter Edward Boyd. Ed, good morning. The US inflation numbers, they were released overnight. Inflation was at a 40-year high in February. How is it looking in March?
It's not much better in March, Danica. Inflation is at a 40-year and 5-month high in the month of March. So inflation in the United States increased by 8.5% over that 12-month period, and it was up 1.2% in just the month of March. It's not really surprising when you look at some of the things that went up in cost. The big one was petrol. Petrol prices were up 18% over the last 12 months, and that was the biggest contributor to the US inflation numbers. Food was also more expensive, along with rent and energy costs in America. These are all things that we can relate to in Australia as well. So inflation at a 40-year and 5-month high in the USA, what it means for the US Federal Reserve, who are meeting on the 4th of May next month, is they're very likely now to lift interest rates by 0.5% in the US. So that's going to really increase the cash rate there quite significantly. And it's really a sign for what other economies around the world are experiencing, particularly us. We'll get our inflation figures in a few more weeks. And inflation in Australia is predicted to be very high as well, but not near the US levels. Probably around the 4% figure is what we're thinking for inflation for our quarter of March this year.
OK, and Ed, tomorrow the jobs numbers for March will be released. Economists predict the unemployment rate to fall below 4%.
Below 4%. So the expectation is unemployment will come in at 3.9%. There'll be 30,000 jobs created during the month of March. And if unemployment does fall below 4%, that'll be the first time the national unemployment rate has gone under 4% since the 1970s, since around 1974. So we know there are a lot of businesses out there that are currently trying to hire staff. Job vacancies are at pretty much record highs. So it all bodes well for the employment figures. We know the unemployment rate, the Reserve Bank believes it's going to continue falling throughout this year. Not sure how low the unemployment rate can go, but potentially around the 3.5 or 3.4%. That's what the Reserve Bank wants to see. They want to see the economy at full employment, where everyone that has a job or wants a job is in work. So the RBA, Danica, the RBA then have their cash rate meeting coming up in May. They're going to hold rates in May, but they will lift interest rates in June, so a couple of months away.
And let's talk elections. What else are we talking about at the moment? You've assessed the share market performance over the last 5 federal elections. Do they have any impact on shares?
They don't have much of an impact at all. I had a look at the previous 5 election campaigns in Australia and looked at the share prices before and after the election, and 6 weeks before and 6 weeks after. And there was no real discernible impact from the election on the share price. So, for example, 2007, the world economy was going into a global financial crisis. So share prices in Australia went down over that election campaign. But that's purely market forces at play. And that's what I saw for the other election campaigns as well. Particularly 2019, the economy was doing very well at that point and really lifting. The share market lifted with it. So there's not really any direct link between a federal election and the ASX 200 stock performance, which I guess is a pretty good thing. It just shows the market is very stable.
Yeah, absolutely. A fascinating analysis. Edward Boyd, thank you.